So today, by popular demand, we're going to take a look at B&M because they did bring out their Q1 earnings, and I know when I do B&M videos, they're pretty well received. A lot of people, I think, that follow me also have some investments in B&M, or I have a lot of UK investors that follow me and have a bit of interest in B&M at the moment. So we're going to take a look at their update that came out today. I've got to say, it was a busy day of news in stock market in general. I could have talked about the US inflation data. I could have talked about and the true inflation data at the moment. Could have talked about DraftKings. I felt like that stock could have been up a little bit more than what it has been today with the news that it's going to be entering the prediction market. Could have talked about AMD. That one's up another 6% today. Could have talked about Barrett Redrow after their drop as well. Could have talked about K-Box and their update. Could have talked about Mobico and why that stock is up 10% today at the moment. There's a lot of things I could have talked about today. So tomorrow on Wednesday, let me know in the comments which one do you want me to talk about. The one that gets the most likes, I will cover on tomorrow's video. Today, I just wanted to do a dedicated B&M video. So B&M, obviously, the stock had a pretty awful day. It's down about 8% as I record this video right now. The market is about to shut in a minute. But at the peak of it, the stock was actually down 13% on the open, which was incredible. And I'm sure if you guys are a Patreon member, you're in the private group on the Discord. Originally when the update came out this morning, I was reading it about 7 a.m. and I read through it and I went, pretty good that. Like, it's a step in the right direction from where we've been, and kind of all the things that I was looking at kind of was shown in that update, and I thought, you know what, it's a good update. That I was thinking to myself, you know what, I could see this being up 10%. If it's not up 10%, maybe 5%, but yeah, you know, maybe 10% up today. And then the stock opened up, and I looked at the stock and I went, down 30. It's got to be up 13%. It's not down 30. And I was it's like, it's red, like it's down 13%, and I couldn't believe the stock was down 13%. Could not believe it. I read that update, and in my opinion, I was like, it's an update in the right direction. And I could not believe when I saw the stock had fallen 13% at the open. The fact that this was down at a 52 close, £2.20, I could not believe it. I tell you guys. So yeah, I'll let you know right now, like, as soon as the stock was down 13%, I was buying pretty aggressively. You guys on the Patreon obviously know that because I was posting in real time, and you'll probably know the pretty significant increase that I did make on the position in that time frame. I was buying on that 13% drop. I could not believe the stock being down. In my opinion, I thought the stock was going to be up today, not down. So yeah, I was buying the stock. The fact that that fell to £2.20 was shocking to me, because to put it into context right now, okay, that means the stock has now fallen from where it was at its COVID lows of around about £2.70. The stock is now 15% below its COVID lows. To put that in context of how much the business has improved since then. So if we go from, let's just call it 29, no, let's go from March, because it wouldn't have been affected that much by then. So from March time, they went from 3.8 billion, and now they're doing 5.5 billion in revenue. And if we go from the profit, 203 million profit to 319 million in profit. So the company has significantly improved since that time frame. And yet the stock is down 15%. And since the stock IPO'd in 2014, this is the more scary one. The stock from when it IPO'd in 2014 is now down 17%. That is crazy how much that stock has dropped. Now, let's have a look at the update that did come out. So first of all, the first numbers looking at here, revenue growth of 4.7%. I was like, yeah, that's okay. You know, you look at what we were growing at last year, and last year we grew at 3.8%. So it's a step in the right direction. When we looked at the growth in France, 7.6% growth, which is just slightly below where they were at last year. So nothing wrong with that as well. And Heron Foods last year had negative 0.6% revenue growth, and Heron Foods came in at 0.4% growth, negative growth, which is a slight step in the right direction, and was a pretty significant improvement for where we were in Q4, because I think Q4 was like negative 3% growth or something. So overall, I looked at the revenue growth and I was like, okay, they're a little bit better than where we have been previously, so that's all okay. The next thing was like-for-like sales. So the like-for-like sales was up 1.3%. And that was obviously a step in the right direction as well, because when we look at last year's numbers, the last year's negative like-for-like growth was 3.1%. So the fact that they've gone from negative like-for-like growth into positive like-for-like growth, that was a big thumbs up for me. That was the big thing that I was looking at going, okay, they've got like-for-like going back in the right direction. the market should like that. And like I said, the market just totally threw it under the bus. And that really surprised me because the headline numbers there for me were strong. Now, from that point of view, I went back in for a second read. I was like, okay, is there anything I can pick out here to why the market doesn't like it? So they said that the FMCG sales were a little bit negative. However, the performance in health and beauty categories have been better following improvements into the store. And also they talked about that the UK general merchandise sales and units increased in Q1 on both like-for-like sales. And obviously garden sales did well despite deflation in average selling prices. They also said the average selling price deflation has led to lower trading gross margins. So I thought, okay, did the market throw its toys out of the pram because of this reason, that the gross margins are going to be lower? But when I'll get into the conference call in a second, but as we can see here, however, from Q2, we will be expecting to see improvements because of a higher bought-in trading gross margin. And in the conference call, they also suggested that they were also going to see some improvements as the year went on. So then they did the webcast, which you can sign in and go watch it. It was about 25 minutes long. It was a pre-recorded webcast. And also they did a pre-recorded live Q&A sessions. They tried to get questions that they thought analysts would want them to answer. And I got to be honest with you, like I thought, oh, that's a cop out. And then I listened to the questions they were asking, and they're actually really good questions, to be fair. And the reason why they gave the pre-recorded webcast is because obviously it was under the new CEO, who sounded really good, by the way. And he said, look, I haven't really got time to do it at the moment, and the next one will be live. And also I want to get a little bit more of a grip of the company before I kind of feel like doing a webcast. So I kind of think that was actually a pretty fair response. And to be fair, when they did the webcast and then they gave some of the questions on it, he didn't really dodge it, and he gave loads of good information on it. Now, what was also provided on the webcast, I'm sorry, this is the screen I'm using for the webcast. I probably should have preloaded the webcast. But the information he gave was really good. So he said he started off his introduction, like a bit about himself, and obviously he does have a pretty good record in this space as well, which is another confidence boost to B&M. Obviously, previously to B&M, we had the CFO come in, and the old CFO come the CEO, and that always makes me nervous. Quite often, CFOs don't make good CEOs. And I remember a quote from him where he was like, "Oh, you can see with previous things that I've done, I never aim for the midpoint. I always go for the high point." And then he did a profit warning like in the next update, and I was like, that's the point where there's no coming back from that. So obviously that's, for me, that was where the last CEO lost a lot of trust. But obviously, this is the first conference call that we've had under the new CEO. And yeah, great introduction. Talked about a bit about his past. Said what he's been up to in the first 4 weeks he's been there. Said he's been visiting a few stores. He's actually been working at the shops to kind of get a grip on like how things are working, and gone into them as customers to see what they could improve, which sounded really good as well. He talked a lot about the margin situation as well. Obviously, he said like and it was in the Q&A session as well. Like, yeah, the margins obviously are slightly lower, but as the year goes on, we actually expect these to start improving. We expect them to improve because of shipping rates, FX rates, and also he said like the key thing at the moment is, if you look, we are shifting more on volume. So what we need to do as a company right now is we need to control the pricing better. So people coming in buying more, but we need to make sure that the price that we're bringing products in is better, and the price that we are selling them are better. So this is like, there's not really that much of an issue with B&M at the moment, because people coming in, people spending them, buying more things. We just need to control the pricing a bit more, which was great to hear. He then also talked about like, we are trying to improve our like-for-like growth still. So one of the changes that they made, which we saw here, which was talking about the health and beauty cleaning categories. So he said like, one thing that we tried to do is offer more of these products inside the store and more variety, and because of that we're seeing like-for-like growth improve. So you can see here, at the moment, clearly the CEO is trying to try things to improve those like-for-like growth, and these are like one of the things that he's tried, and he's seen the success from it, and that's really good as well. So it was great to see that is trying things to get this like-for-like growth up, and they're seeing results from it. And also that actually, you know what, the market that seems to throw the toys out the pram because of the lower gross margins, actually, you know, the management are actually aiming that, you know, they're going to see this improve as later in the year. And it wasn't just kind of, sometimes you see these companies and they kind of go, oh, trust us, it's going to get better by the end of the year. But because they actually said, look, we've got line of sight with the FX rate, we've got a bit more line of sight with the shipping rates, we kind of have the confidence to say, look, it is going to get better through the year. So I'm surprised when B&M went on to do this webcast at 9 o'clock. I guess it did have a bit more of a jump up on the share price. I was expecting probably even more than this, to be fair. So it is what it is. Overall, one point I've got down here, which I just kind of talked about there, is that the volume sales, it looks good here. It's just that they need to improve what they're buying in at and what they're selling at, and hopefully the new CEO they can do that as well. He also talked about a few things like the B&M expansion going forward being a key part. He talks about the insider ownership, showing how confident they are that this can get a lot better with the amount of insiders that are buying into the company right now. And yeah, ultimately, like, I looked at the update and I saw the stock go 13% down today, and I saw the dividend yield go above 6.5%. I saw the P ratio drop to like 6 times earnings, and the results were good. Like, yeah, maybe the market kind of got a bit upset because of the gross margins comments, but realistically, like, if you listen to what management are trying to do at the moment and what they kind of are saying at the moment, and even from Q2, and you know, they kind of said, look, we can get it better from here. I don't understand why the market threw it down so much. Like, these numbers for me, when I looked at them, and you know, remember as well, like, we just had the UK GDP growth out, and negative growth again for the month. So we have a UK economy that's shrinking at the moment, and these guys are still growing at good rates. They're improving the like-for-like sales. Yeah, maybe the gross margins was maybe the point that could have been slightly better, but they said it's going to improve, and it sounds like they've got pretty confidence that it's going to improve as well. And let's not forget where B&M is. You know, I always say this, that it's always key to put it into terms of context about where the valuation is, which is like 6 times earnings. And also, it's important to put into context like what the share price is. You know, if this was sitting at 52-week highs at 15 times earnings, I could understand a 15% drop maybe today, 13% drop today, 10% drop today. The fact that we're sitting down at £2.41, you know, at 6 times earnings, below the COVID lows, at 6.5% dividend, the stock did not make sense to me why it dropped today. And I was in there buying. And I was making the comparison as well on the private group about Dollar General. You know, very similar discount store in the US, up 49% year to date, trades at 21 times earnings, a lot less dividend than the likes of B&M, for example. And yet, when you look at like Dollar General numbers, and you look at their numbers that they've just recently come out with, you know, their revenue growth is only just slightly higher than where B&M is at. Yeah, same store sales are slightly stronger, to be fair, and a lot more of it's kind of flowing to the bottom line. Okay, so yeah, it is in a better place than where B&M is at the moment, but it does show you, like, you know, a US company that is similar space, yeah, slightly better financials, but you know, trading at 21 times earnings, and then you know, you're looking at B&M that's at like what, 6 times earnings, 7 times earnings with a 6% dividend yield. You know, no wonder companies are giving up on the UK markets when you know, you come out with an update like that and all the financials are starting to step in the right direction. A really solid update from the first time from this management team, and the market rewards it with a 13% drop. I thought it was absolutely ridiculous anyway. So that's my thoughts. Quick look at the numbers. The numbers, 5% revenue growth. You know, they're growing about 5% a year right now. I think they can get it up to 7% if they improve those like for like. And if it does, worst case scenario goes down a little bit here, I factor that in. Profit margin of 5, 6, 7%. They've normally been around about a 6, 7% profit margin. And obviously 5% if it shrinks a little bit at the moment. 15 times earnings. I think 15 times earnings is a fair valuation for someone like a B&M. Very much near its historic valuation where it's traded at. Very much similar to some other retailers in this space. And even on the low side now, we're getting 100% upside, 164% on the mid side, and 232% on the high side. Let's not forget, you know, you're picking up a 6% dividend yield here. And if they continue doing this special dividend, that's another 5% on top. So you're actually at 11.5% if you had the special dividend on top, which is absolutely incredible. Obviously, I don't know if the new management team are going to do that. They might start doing share buybacks, which may not be a bad option right now considering where the stock is, or even reducing the debt, which I would not mind either. But just to point out that if they were to carry on doing the special dividend as well, that is incredibly high, 11.5%. But even without the special dividend, 6.24% at the moment, and this morning you could have got it even, it was at 6.5% this morning. So, add, 5 years on that, you're up to about a 30% dividend yield from it. So you had a 30% dividend yield on top, 130%, 190%, or 160% upside, incredible. And let's say that even if the profit margin shrinks to 4%, let's say the total earnings multiple goes from 15 times earnings, let's put them down to a 12 times earnings. You're on 30% upside here with those financials. So even if you think revenue growth is going to go even worse from here, if you think the profit margin is going to shrink even more from here, if you think the metric compression is going to be 12 times earnings, you still make 30% on this, and then you add a dividend on top, and you got another 30%. So you're up to 60% return. 60% return, and thinking worst case scenario, if it even gets even worse from here right now, you still make that return. It's not too bad at all, is it? And then, like I said, I don't think they'll do those numbers because we are starting to see the growth come back and like for like improving a little bit at the moment. And and then if it does end up being a little bit better than that, the upside's even more than that. So yeah, I'm a fan. I thought the drop was ridiculous, and I was buying today, and that's my thoughts on it. So yeah, let me know tomorrow what do you want me to cover? DraftKings, inflation, Barrett Redrow, Catebox, AMD. Let me know what you want me to cover tomorrow, because there was just a lot of news out today. So and I think we even have Evolution's earnings tomorrow as well. So yeah, let me know in the comment section, and I'll cover the most popular one in the comment section anyway. Thanks for watching. See you in a bit.